Hello and welcome to the April market update for the Pikes Peak region of Colorado. I'm Dan Noel with the Johnson team. In this video, we'll take a look at the latest statistics for the local real estate market and provide some analysis and insights to help you understand what's happening, what it means for buyers and sellers, and what you can expect moving forward. We're going to be looking at all of the most important metrics, including sales price, number of homes sold, available inventory, days on market, mortgage rates, and the market action index. If that all sounds extraordinarily boring to you, here's the TLDR. The Pikes Peak region's market is still hot, but it has definitely cooled down from the chaos of this time last year. We have a far more stable situation overall, with steady appreciation in the coming months. I expect buyers and sellers to have a great opportunity for at least the next 60 days or so to benefit from a balanced market with relatively stable prices and mortgage rates. Now, if you're still with me, I want you to know, you mean the world to me. I couldn't do this without you. Well, I could do this without you, but I wouldn't want to. I do like the sound of my own voice, but anyway, thanks for being here. Let's start by taking a closer look at the median sales price for homes in the Pikes Peak region. In April of 2022, the median sales price was $475,000. Fast forward to April of this year, and we wrapped up with the median sales price stabilized at about $445,000. While there have been some fluctuations in between, the fact that we're approaching the same median price as 12 months ago is a positive sign for both buyers and sellers. For sellers, it means that prices have held relatively steady despite any market fluctuations, and we certainly had some. And for buyers, it means that they have more affordable options this year compared to last year or even earlier. Many of our clients have had some difficulty putting all of this in perspective, and this might help. Homes today are worth approximately what they were worth in February of 2022, and they're increasing. And if you owned a home in the area for about 5 years, you would be up, on average, 50% or $154,000 in just 5 years. This is why real estate remains Americans' #1 wealth building tool. But keep in mind, it's all fake money unless you actually sell or leverage the equity in your home through a line of credit or something like that. But to sum it up, the stability in median sales price signals a more balanced market, and that's good for everybody in the long run. Looking at the number of home sales in the Pikes Peak region over the past year, we see a steady decline from May of 2022 to January of 2023. In the past 2 months, though, we've seen an increase in home sales, which is expected for this time of year. In fact, in April of 2023, there were 1,164 homes sold in the region. Now, clearly, this number is substantially lower than the 1,724 sales at the same time last year. But the reason for the decline is pretty simple. It's all about the increase in mortgage rates. As rates rise, some potential buyers are less qualified to purchase a home, and some current homeowners are less willing to move, giving up the lower rate they already have. Despite this, we are seeing a recent uptick in home sales, which is a positive sign for the future of the market. In fact, April's increase over March this year is substantially better than the average, so we can expect a relatively busy summer. We at the Johnson team have already canceled all of our plans in preparation for your needs, don't you worry. Speaking of mortgage rates, let's take a closer look. We see a steady rise from April 2022 to October 2022, with a peak of 7.08% in October. I remember this time. This was the great panic of October 2022. It was just like it was yesterday. Since that time, though, rates have decreased, with April 2023 seeing a rate of 6.43%. Now, while higher rates do make it challenging for some buyers, it's important to remember that the rates that we're seeing today are still historically low. We've just been really spoiled for a really long time. And here's something to always keep in mind. If you don't own a home currently, buying one, even with the higher rates we have today, puts you in a position to build wealth for your future. Renting just can't do that. And if you think about rates in general and expect them to go down, you can refinance when they do. If you expect them to go up, you should hurry up and lock in while they're low. In other words, you really need to evaluate your entire life situation and your investment opportunities with real estate, and don't give interest rates more credit than they're due. They're certainly very impactful, but they are not permanent. Let's look at the available inventory of homes for sale in the Pikes Peak region. We see a fluctuation over the past year, which is typical in the seasonal industry. In April, there were 2,547 homes available for sale, which is a slight decrease from the 2,621 available in March. But the current number is still higher compared to the same month last year, where we had only 2,024 available homes. Alright, so you're watching this video, which means you're smarter than your average bear. Let's be real. It's not gloating, it's just acknowledging a fact. You're brilliant. So you're probably asking yourself a very important question. You're saying, okay, you tell me 2,547 homes. Is that good? Well, I hear you, my friend. For some perspective, when we look back historically, in a more balanced market like that of 2015 to 2016, we had over 5,000 homes for sale in April. So this is one way to determine how hot the market is. I'm going to show you an even better one though when we get to the market action index, but in the meantime, take my word for it, it is hot. So hot. Moving on, let's take a peek at the average number of days on market in the Pikes Peak region. So days on market is a pretty good indicator of buyer eagerness. And if you recall back in July of last year, those jerks at the Fed messed up everybody's mortgage rates. So from that time through February of this year, we saw days on market steadily increasing. That increase led us to a peak of about 56 days. Since then though, we've seen a decrease in days on market in March and April of this year, with the average time dropping to 41 days. This is good news for sellers who want to sell their homes quickly, and the market is still way more favorable to buyers than it was this time last year, when the average time on market was only 14 days, which caused everyone to pull all of their hair out. I mean, believe me, these are all implants. So all you buyers who got fatigued by the madness back then, this is a great time to just take note of what's actually happening today and maybe give your favorite realtor a call. The last statistic we always want to look at, as promised, is the Market Action Index. I love this guy. It's the most objective measurement of the temperature of the market and serves as a simple indicator that compares supply and demand. It's important because it helps identify whether the market favors buyers or sellers, making it easier to make informed decisions about buying or selling properties. We calculate this index by comparing the current rate of home sales to the inventory of available homes. A value of 30 is considered a balanced market. If the Market Action Index is above 30, that means it's a seller's market because demand is high and supply is low. And if it's below 30, it's a buyer's market because demand is low and supply is high. So looking at our region, we see a significant decline moving towards a more favorable buyer's market over the past year. In April of 2022, the index was at a very high 85. This meant crazy demand for properties in the area and a tremendous seller advantage. Those fatigued buyers I mentioned earlier, they know what I'm talking about. And if you think I'm being dramatic, you try offering $50,000 over list price in the first hour and not even getting a call back. The struggle was really real. Anywho, as time went on, the index steadily decreased, hitting a low of 28 in January of 2023. That's right, we had a slight buyer's market, but if you blinked, you missed it. Now, we've seen an increase in the past few months after folks have adjusted to the new reality of reasonable mortgage rates, with April of 2023 showing an index of 46. This indicates a far more balanced market than we've experienced in the last several months, and a pretty good supply of homes relative to the demand from buyers who are ready and able to purchase. That means that buyers can make sound decisions with more than an hour or two to think about it, and sellers can receive more solid offers from those committed buyers. See? It's always sunny here in the Pikes Peak region. Mr. Optimism here. And before I forget, if you want to watch the market more specifically in your own area, you can check out the link in the comments. Just select your zip code and you'll be able to get all of the stats, even the nerdiest of you could possibly want, right there. So where are we heading? Well, it's a pretty complex topic that I address in my economic update, but the gist of it is that the real estate market in the Pikes Peak region is looking stable with steady appreciation in the coming months. While there may be some economic bumps in the road ahead as the Fed continues to try to reduce inflation, it's important to remember that real estate is a long-term investment. And in the midst of almost any recession, some people may feel the strain more than others, but those who aren't directly affected tend to come out ahead, actually. Goods and services become more affordable, and there are ample opportunities to invest at the right price. So if you have a stable job, now is a great time to be in the market as a buyer or seller while rates are still stable and prices are climbing at a stable rate. Remember, this isn't just a typical purchase or sale. It's real estate. You live in it, and it's unfailingly the best investment most people will ever make. But we know it can be an intimidating decision, which is why your boy Dan, and more importantly, the Johnson team, is here for you. Thank you very much for tuning into this month's market update. As always, please don't hesitate to reach out to us whenever you need assistance or guidance. We're dedicated to helping you with all your real estate needs, and we're always just a phone call or email away. No strings attached and no commission needed. If you could do me one favor though, it's really important to us that we provide valuable insights to you. So please leave a comment to let me know what you enjoyed and what you'd like to see me change in the future. I'm all ears. Thanks again for watching. We look forward to connecting with you soon. We'll see. The driest mouth. Yeah, all right. Okay. So where? Oh, don't do that. You gotta settle down before you read. Okay. Those jerks at the Fed messed up. Blah, 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 blah. They always mess me up too. We've seen a steady increase from July of 2022 when those jerks at the Fed messed. Blah, 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 got it. This one is 100%. I mean it. This is 100%. And shouldn't write jokes. Just be funny. You don't need jokes. You're a funny guy, Dan. Just be funny. I have too many dogs. You got this. You're just gonna finish this up, wrap this up, edit it up, get it out. Everybody likes it. I like the data. People like the data. Give them the Do they like the data? I like the data. Take note of what's happening right now and give your realtor, if you have one, hopefully you don't have one, but now you do have one because I'm one and I'm happy to help you. We are happy to help you. You don't really want me. You want some of the good guy. I got a great team. Anyway, give us a call. We'll take good care of you.